All right. Okay. Hello, everybody. Hi, this is me, Larson Charles from Easy Markets, and this is the Daily Pitch International breaking news. Look, we do have a very eventful day today. Honestly, like everybody's focused on the NFPs, the U.S. job numbers. Yes, they're very, very important. Of course, that's for sure. But I just wanted to point out something else to you because I think that because of all these US numbers. Everybody else is forgetting about some other pieces of data, like important data sets like the Eurozone GDP numbers or the Canadian employment numbers as well, because Canada is also delivering its employment numbers. So I'll talk about all that, but just before we go any further, just a quick read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Also, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, as I said today, as you can see by the calendar, not only that the US is delivering its job numbers, but Canada as well. So for those who are trading something Canadian, let's say dollar related, then it's something for you to keep in mind. So let's have a look very quickly. So what's happening today? So yes, average hourly earnings, employment change, part-time employment change as well, participation rate, and of course the unemployment rate. So the unemployment Canada's unemployment rate is expected to increase, going from 6.4 to 6.5. So everybody's going to be keeping a close eye on that because look, the number has been a little bit on a roller coaster ride, I would say. So since, let's say, the beginning of this year, in January, we had a drop by 10th base by 10th per 10 1/10 of percent from the forecast. Then in February, it continued to decline. Then it picked up, started picking up again in March. It increased in April. In May, we dropped again a little bit. June, we kind of stabilized. July, we started pushing back up again here. August, we declined a little bit again here, but in general, I mean, declined in relation to the forecast. But in general, it has been picking up. If you look at where we were at the beginning of this year at 5.8, now we are expecting a 6.5. So basically, look, it has been increasing. So in general, not very good for the economy, right? So look, I'll pick up on USD CAD in a bit, but I just wanted to show you as well that the participation rate has been drifting a little bit, slightly to the downside since January. So not significantly, but slightly we can see the trajectory now. So yes, keep your eyes on the Canadian job numbers, because employment change is very important as well, since like the NFP of the US. And this has been a little bit on the lower side as well, so it has been suffering late over the past few months. Let's see what's going to happen here. If we do by any chance get a number which is going to be close to the previous, somewhere in the around zero mark basically, well, I don't think that this is going to be, that's going to sparkle very well with the bulls, but I think that's something that the Canadian dollar could, weaken on. The only problem is that depends against which currency. So, if we're looking at USD CAD, in general, I already said in my previous live webinars that I'm a little bit more bearish on the US dollar right now. So even though we get, let's say, not as satisfying numbers from Canada as we would like them to be, and let's say they come out somewhere in the same range where they are right now, so somewhere in the same kind of ish, like area, then that could still be seen as a good thing here for the Canadian dollar, because for example USD CAD could continue sliding because everybody's now focused on the US numbers. If those do not work out well, today. I think that USD CAD here could continue sliding, despite the fact that US oil, in general, the WTI oil is drifting nicely to the downside. So in general, you would say, hey, that's not very good for the Canadian dollar, but in relation to the US dollar, it looks good. So that's what I'm saying. So USD CAD here could continue drifting lower. From the technical perspective, I talked in my webinars before that I said that, look, I'm still leaning towards the downside, but given that we had a bit of a retracement here towards the 23.6 here on the Fibonacci retracement, which I have drawn here from the high of the highest point of August to the lowest point of August, we did that 23.6, fantastic resistance. There we go, drifting lower now. But I'm not really getting very comfortable with the downside yet, because what I need to see here is a drop below that 1.3441 zone right here, which is the lowest point of August. If we clear that one, this will confirm a forthcoming lower low and could open the door towards my next targets, which are the 1.3420, 1.3358, something ish right there. But in general, I'm targeting this upside line, taken from the lowest point of July of 2023. I know it's a little bit on the tentative side, the upside line, but hey, nevertheless, I think it's a good area to target. But a clearance of the current low, I mean, not the current, but in general, the lowest point of August is required. So keep your eyes on that. Like I said, keep your eyes on the economic data, because everybody's focused on the US job numbers, and everybody's forgetting that we're getting Canada's numbers as well. So if you are trading something Canadian dollar related, keep your eyes on that as well. Because look, for example, GBP CAD here, you can see that that's what I'm talking about. The GBP CAD here is showing a good picture. We're seeing some strength in the pound still, and the weakness in the Canadian dollar. So this is a good reflection of what's happening. CAD CHF here is drifting lower, but I think that yes, it's also a good reflection, because we can see that the Canadian dollar is getting weaker. But maybe this could be a little bit of a less of a good example, because the Swiss franc is seen as a safe haven like the Japanese yen. So maybe it's just picking up some interest because of the markets being in the selling mode right now. Euro CAD, which I don't have it here on the on my list, but EuroCAD, let me just bring it up here very quickly. It's also showing some strength here. So basically, let me just remove this. So basically, this is also a good reflection of what's happening right now. So the Canadian dollar is on the weaker side. You can see that clearly on the EuroCAD and GBP CAD, but USD CAD is showing us a little bit of a different story, just because, like I said, the US dollar is not feeling very well, and also because we are expecting those rate cuts from the Federal Reserve. But look, for more on all that, you can join my live webinars, which I do every morning at 6 o'clock GMT time. So yes, ladies and gentlemen, but on that note, I would like to end this one, but I'll pick up on some other economic data sets. So stay tuned. Always subscribe. Please do subscribe. The reason why is because, hey, try not to miss out on our little videos that we do here, and hopefully you will find them useful. So maybe a little piece of information would, if you'll find it useful, that's great. I'm happy. So ladies and gentlemen, I'll see you later. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Thank you very much, and bye-bye.